Most traders enter the market believing the main challenge is learning how to read charts. They study indicators, patterns, and strategies, expecting that more technical knowledge will eventually lead to consistent profits. But after years of observing traders in real market conditions, many experienced professionals have come to a very different conclusion. Welcome back to the ComLucro channel. In this video, we will explore a series of insights from professional trader Tom Hougaard, focusing on the psychological side of trading, how human behavior influences decision-making, and why many traders struggle even when they understand the technical side of the market. If you enjoy this kind of content, make sure to like the video, subscribe, and turn on notifications so you do not miss what comes next. And let us know in the comments what topics you want us to cover next. You will also find links to our trusted partners in the description. When you use those links, you help support the channel and keep this content moving forward. Before we begin, it is worth understanding who Tom Hougaard is and why his perspective on trading attracts so much attention from traders around the world. Tom Hougaard is a professional trader, author, and educator known for his highly transparent approach to trading the financial markets. Unlike many educators who focus mainly on theory, Hougaard became widely recognized for publicly sharing and explaining his own trades in real time while trading live markets. Over the years, he has built a reputation for his aggressive yet disciplined trading style, particularly in short-term index trading. His work focuses heavily on trading psychology, risk management, and the mental challenges traders face when making decisions under pressure. Tom Hougaard is also the author of the book Best Loser Wins, which explores one of the most counterintuitive ideas in trading. The traders who succeed are often not the ones who avoid losses, but the ones who learn how to handle losses better than everyone else. What makes his perspective especially valuable is that it comes from thousands of hours of real market experience. Rather than presenting trading as a perfect system, Hougaard speaks openly about the emotional battles traders face and the discipline required to stay consistent in uncertain markets. In the next clips, we will explore several of his insights about trading psychology, decision-making, and how professional traders think about risk, discipline, and execution in the market. But before we dive deeper into trading psychology, Hougaard starts with a surprising observation about how trading has changed over the last 20 years. Here, Tom Hougaard explains why better technology and more information have not necessarily made traders more profitable.
Do you know how much I had to pay in spread in 2001 when we started trading that? Any takers? 8 points. Someone has done their homework. Yes, intraday, you paid an 8-point spread. Can you imagine trying to make a living trading the Dow with an 8-point spread intraday? And if you wanted a quarterly contract, you had to pay a 16-point spread. And Euro-dollar, which is today trading, I don't know what CMC spread is, but it's probably about a 0.5, 0.6 thereabout. Back then, we paid 3 full points to get into Euro-dollar, and dollar-yen was a 5 points. I mean, this was you're thinking, holy smoke, how did you not blow up immediately? We did blow up immediately because we paid all our money away in commission and spread. But not only that, we don't have access to what you have access today. I heard, I think his name is Ed, he was talking about that with CMC markets, you have pattern recognition programs, you will have news, you will have level 2 data, you will have extremely tight spreads. We didn't even have any of that. I spoke to an old colleague of mine who I used to work with in City Index, and we discussed when did City Index actually get their charting package? And we agreed it was probably around 2005 that we actually got a fully working charting package. Yeah, can you imagine trading with a broker today that doesn't have a charting package? No, of course not. Yet, even though that you have far better spreads, you have access to news, you have access to data, you have access to pattern recognition programs that tells you it's a double button, a head and shoulders, and a wedge and a pennant, etc., and a flag, even though that you have access to way more information in any shape or form, can you trade? No. You're losing as disastrously as we did 20 years ago. And so with the greatest of respect to CMC market, but you're not going to become the trader you want just because your relationship manager at CMC Markets is a great guy or girl. Nor are you going to become a great trader because the CMC market platform is great and award-winning. I don't care if it's NASA themselves that has designed the trading platform, won't make a blind bit of difference to your long-term results until you learn to think differently.
The key lesson here is simple. Better tools do not create better traders. Today, traders have tight spreads, powerful platforms, and more information than ever before. But the real challenge in trading has never been technology. The real challenge is how you think, how you react under pressure, and how you manage your decisions when money is on the line. Until that changes, better tools alone will never change the result. Next, Tom Hougaard challenges one of the most common paths new traders take when they first enter the market.
So what's normal behavior when you get into trading? Oh, let's do one of those weekend courses with one of those gurus, you know. Oh, he talks so elegantly and he's really good looking and his smile is from ear to ear. I want a bit of that. Surely he must know. No one can be that good looking and not know what they're talking about. I'm going to learn about candlesticks. I'm going to learn about RSI, MACD, RSI. Ooh, have you heard about that Bollinger Band? It is amazing. What's that Fibonacci thing? A ratio for every season? 38%, 50%, 61%, 78.6%, 88.4%. You ever heard about the secret ratio of 94.6? It's just between you and I and 2,000 pounds of your money. Thank you very much. Unfortunately, it's still not going to make you a penny. Am I annoying you now? Are you bored? Are you thinking, I want technical analysis? I don't want to be told that I am rubbish at this. But you are. Statistically speaking, you are doing what everyone else is doing. And if you continue to do so, you're just going to continue with the inevitable. And I would like to give you an opportunity to get off that path and start thinking differently.
Tom Hougaard is pointing out a pattern that many traders recognize in themselves. When people first enter trading, they often start by searching for the perfect indicator or the secret strategy that will finally unlock the market. The problem is that millions of traders follow exactly the same path. They learn the same tools, watch the same courses, and look at the same signals. When everyone is doing the same thing, the edge quickly disappears. Hougaard's message is uncomfortable but important. Long-term success in trading rarely comes from collecting more indicators. It comes from learning to think differently and developing a mindset that most traders never build. Now, Tom Hougaard explains why the real problem in trading is not a lack of technical knowledge.
See this book here? It's called The Bible of Technical Analysis. Not the King James Bible for Christians, but the Bible for Technical Analysis, written by Edwards and McGee. Were Edwards and McGee traders? Ladies and gentlemen, were Edwards and McGee traders? No, they were not traders. They were journalists. More than 1 million copies of this book has been sold. Normal leads to broke. And the brokers, they're well-meaning. They want you to do well. Why does a broker want you to do well? Well, hell, the better you do, the more you're going to trade. The more you're going to trade, the more commission you're going to place. It's logic. Of course the brokers want you to do well, CMC included. I'm not knocking CMC, but CMC are not traders. IG is not traders. City Index are not trading. Gain Capital are not traders. They're not the ones where you should be getting your guidance from. Sure, by all means, learn about technical analysis, but technical analysis has never made anyone anything. You're not going to get rich from trading by learning technical analysis. In short, your problem is not that you don't know enough about technical analysis. Will you trust me on this? That you don't need any more technical analysis. You need a serious review of how you think when you're trading. So let's try with that. My argument is that if 80-90% of people are losing when they're trading CFDs, this is not a broker problem. This is a human problem. And particularly, I think I mentioned it before, I believe that those 80-90% are perfectly rational people. Intelligent, good-looking, smiling, good mums, good dads, good students, good everything. They're just rubbish traders because they haven't learned to think properly. They haven't learned to deal with fear.
This clip touches on one of the most uncomfortable truths about trading. Most traders believe their main problem is that they still need to learn one more indicator or one more strategy. But Hougaard argues that the real issue is psychological. Thousands of traders study charts and indicators for years, yet they continue to repeat the same emotional mistakes when money is at risk. Fear, hesitation, overconfidence, and impatience can easily override any technical knowledge. That is why trading psychology often becomes the real turning point in a trader's development. Here, Tom Hougaard reveals a statistical pattern that explains why so many traders struggle to become profitable.
How does a normal person think? Well, if you ask Rodriguez from FXCM, the broker, he did a research on 25,000 of their traders who had executed 43 million trades over a 15-month period. Here's the shocker. Those 43 million trades actually had more winning trades than losing trades. Yeah, the FXCM traders, they were good traders. They had a hit rate of 62%. That's not bad. The problem is that when they won on average 48 points. And this is all trading currencies. But when they lost 82 points. You see, if this had been an analysis of my trades or your trades, we could say, well, you probably had a bad week or a bad month. But when you investigate 25,000 people and their behavior, it's no longer bad luck. That's a sample space that is worthy of an investigation. And if it had been a couple of trades, 10 trades, 100 trades, you can argue, well, it's a small sample space. But 43 million trades, of which the majority of them were executed in euro-dollar, one of the most liquid instruments globally, that's a pattern.
This statistic reveals one of the most important concepts in trading. Many traders believe that success depends on having a high win rate. But the data shows something very different. These traders were right 62% of the time, which sounds impressive. Yet they still lost money because their losses were much larger than their wins. This is the classic trap of trading psychology. Traders cut their winners too quickly and hold their losing positions too long. Over time, that imbalance slowly destroys the account. Professional traders understand that profitability is not only about how often you win, it is about how you manage risk and how large your winners are compared to your losses. Now, Tom Hougaard explains how fear and hope shape the way most traders make decisions in the market.
People love to find the low in a bear trend. People love to find the top in a bull trend. There were people, when I walked in here, saying, when do you think the crash is coming? What crash? I don't know if there's a crash coming. What crystal ball is it that you're looking at? Because I just see a market that keeps making all-time highs. Sure, let's talk about a crash if the market's in a downtrend. Let's not talk about a crash when the market is sitting at its all-time high. People think every reaction in a trend is the beginning of a new trend. I would be sitting there night after night watching the market fall or rise, and our client, sure as hell, the moment the market just ticked in the other direction by a little bit, they would pile on as if the trend had now changed. So my argument here is that people are generally fearful when they're hopeful, and they're hopeful when they're fearful, and I will explain that momentarily. Now, what is normal behavior? I am letting my losses run. Why am I doing that? What am I telling myself? Well, I'm telling myself that I hope that this market is going to turn around. But the real reason is I would like to avoid pain. We have a brain which is millions of years old, and it has one primary function, and that is to keep you alive at all costs. And by the way, also love to make sure that you never experience any pain. It wants to make sure that you maintain your ego preservation, your state of mind where everything is rosy and good. So you'll do anything to avoid pain. And it doesn't matter what scenario I throw at you. I'm letting my loss run because the indicator says so or the Fibonacci says so, but actually you want to avoid pain. I'm taking my profits because, hey, you can't go broke from taking a profit. It's still you avoiding pain. Why? Well, because you hate the idea that the market is going to take back some of your profits. I am winning, so I'm reducing my stake size. Why would you do that? Well, because I want to take it easy now. Nope, you want to avoid pain. You can't bear the fact that you made 400 pounds for the day, and God forbid that those 400 pounds would disappear. Let me ask you a different question. Imagine that you made 1,000 pounds on the day versus you lost 1,000 pounds on the day. Who is most likely to carry on trading? The person that have made 1,000 pounds or the person that have lost 1,000 pounds? The person who has lost 1,000 pounds is far more likely to carry on trading, because God forbid that he carries on that pain into the night, and he will do anything to get rid of that pain. But when he's made 1,000 pounds, he'll do anything to protect that, because it feels so good to have made 1,000 pounds. So I don't want to jinx it.
Hougaard's point is simple. Most trading decisions are driven by emotion, not logic. Traders hold losses hoping to avoid pain and close winners early to protect the feeling of being right. Until a trader learns to control that psychological response, the same mistakes repeat again and again. Here, Tom Hougaard explains why professional traders think very differently about winning and losing trades.
People are fearful when they're hopeful, and they are hopeful when they should be fearful. What do I mean by that? Imagine you are sat in a position that is making you the aforementioned 1,000 pounds. You're no longer hoping that 1,000 pounds is going to turn into 2,000 pounds or 3,000 pounds. No, you're fearful that 1,000 pounds is going to be taken from you. And if you are losing 1,000 pounds, you're most likely going to sit there and thinking, wouldn't it be great if this position turned around? You're not fearful that that position is going to get even worse. You're hopeful that it's going to turn around. And if you want to have a fighting chance of making the markets your ATM machine, and this is not a sales pitch, it's a bit of a cliche, I admit that, but if you want to have a fighting chance of making the markets the place where you take money out on a fairly regular basis, you need to turn this around. So let's take a look at not so normal and people who are what we call the 1%. Rather than talking about me, which is something I'm not that good at doing, I prefer to throw the attention some truly great traders. One in particular is someone who I wish I could have met, but he's no longer with us. His name was Charlie D. Here he says, the time you know you've become a good trader is that day you're able to win by holding on to a winning position, and rather than taking half profits, you're adding to your winning position. Rather than beginning to think, where should I get out? You're beginning to think, how can I get deeper in? How can I commit more? He says, there are many people in here, in the pit, that have traded for a long time, who have never added to a winning position. Have any of you ever added to a losing trade? Sure we have. Oh, of course we've added. You know, you bought at 20 and then it goes down to 10. You're thinking, it looked good at 20. It looks even better at 10. But how many of us have bought at 20 and then bought more at 30 and bought more at 40 and bought more at 50? Sure, there will be people who have done it, and good on you. But it's very difficult emotionally to add to a winning trade. It's a lot easier to add to a losing trade because, hey, you feel like you're getting a bargain. You feel like you're buying something which is cheap. And hey, when we started learning about trading, what were we told? We were told, buy low and sell high. Quite possibly the most expensive piece of advice ever dished out in the history of mankind. Because every single time I bought low, it always went lower. And every single time I tried to short high, it always seemed to know that I was in and it would go even higher.
Professional traders often do the opposite of what feels comfortable. Instead of adding to losing trades, they add to winning positions and allow strong trends to work in their favor. In the next clip, Tom Hougaard explains why the behavior that leads to big profits often feels very uncomfortable.
No, I prefer to buy high and sell even higher. And I sure do like to sell short low and cover even lower. So Charlie D goes on to say that it's in our human nature to want to cut our winnings. You bought at 6 and you can get out at 7. Get me out! I'll take that profit. That's just human nature. That's who we are. So, he says, if you want to be really good at this, you need to accept that everything you do when you're profitable hurts. It feels uncomfortable. If you're in a position and it doesn't feel uncomfortable, you're probably not betting big enough. I want to repeat that. When you're a good trader, everything you do hurts. And I'm not talking about a smack in the hand kind of hurts or a smack in the bottom kind of hurts. If it doesn't feel uncomfortable, you're probably not pressing the position big enough. Here's a snapshot from an open trade. This is equating to being £100,000 in profit. This is not the result of normal thinking. You see, what I'm doing here is the market is trading at 25,135, but my first entry was at 25,458. But as the market falls, I keep adding to my winning position. What do most people do when they are in a winning position? Now, I know the answer because I sat and watched this for 10 years. When you are in a winning position, what do? Take half profit, nip a little bit more, move the stop loss down so it is almost meaningless to have a stop loss because you're going to be stopped out by the slightest move in the other direction. People are great at taking half profits. They're just not great at taking half losses. We love to take a bit of a profit home because it feels good. It feels like we're doing the right thing. Why on earth would I risk losing some of my open profits? You can't go broke taking a profit. That's what the books are telling me. Now, the amount of time that I have had 10 or 20,000 pound open profit positions, that will then turn into a zero, a countless. My trading philosophy, ladies and gentlemen, is that I will never get out at the maximum profit potential, ever.
The lesson here is about embracing discomfort in trading. Holding a winning position, adding to it, and allowing a trend to develop often feels emotionally difficult. But that discomfort is exactly what separates disciplined traders from the crowd. Throughout this video, Tom Hougaard shared lessons that go far beyond strategies or indicators. His message repeatedly points to the same conclusion. The real challenge in trading is not the market, the platform, or the tools. The real challenge is how traders think, how they respond to uncertainty, and how they manage fear, hope, and discomfort while money is on the line. Successful traders learn to act differently from the crowd. They control risk, allow winning positions to develop, and understand that discipline and psychology often matter more than technical knowledge. In the end, consistency in trading does not come from finding a secret strategy. It comes from developing the mindset required to make better decisions under pressure. Please also remember that the mission of the ComLucro channel is simple. We focus on giving traders clarity, confidence, and structure, so market decisions are made with discipline and intention. On this channel, you will find complete courses built as a true trading masterclass. We teach market structure, higher time frame trading, and supply and demand, always focused on understanding price behavior and executing with a professional mindset. We also go deep into trading psychology, risk management, and consistency, because trading is not just about charts. It is about mindset, discipline, and structured execution over time. There are no shortcuts. Real progress comes from continuous learning and practice. Our main courses include Smart Money Concepts, Technical Analysis for Day Traders, Trading Psychology, and the Wyckoff Method course. Alongside our courses, we share lessons and insights from some of the most respected names in trading, including professionals like David Paul, Alexander Elder, Tom Hougaard, Mark Douglas, Al Brooks, and Larry Williams, whose experience has shaped how traders understand markets today. So, if this video helped you gain more clarity, leave a like. It helps this content reach other traders who are on the same journey. Make sure to subscribe and turn on notifications so you don't miss our latest lessons and insights. Now, I would really like to hear from you. Which concept in this video made the biggest difference for you? What topic would you like us to cover next? Leave a comment below and let us know. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It is a simple way to support the channel and a smart investment in your own growth as a trader. Thanks for watching, and I will see you in the next video.